What's the dealio, y'all? You already know what time it is, man. We got another banger for you today, right? We got a trade of the day. Every single day, I'm breaking down a trade that I feel like you could learn from, right? So I want to be very clear. It's not about how much money I made in a trade. It's about what was the lesson that that trade taught me and that it could teach you, right? So I break down these trades because this is the type of content that could change your life. This is the type of content that can make you millions, legit, right? Once you learn how to trade and once you learn how to read these charts, literally the world is your playground, and I mean that like at the highest level. All right. So today we got Microsoft, aka Mr. Softy, right? That's what we're gonna call Microsoft, Mr. Softy. So we did 120, well 119.49. I like to be specific, so you know it ain't no cap. So 119.49 on Microsoft. Um, we did a put and we wrote it to the downside. I got four contracts. Each contract was $270. That's a grand total of 1080. And then we was in the trade for about 4 minutes and 20 seconds. And then we made 119 and we sold it for $300. So I bought four. So each contract went up about $30, right? So 30 times four is 120. And then Webull took their commission out of like 50 cents. So that's the trade. So we're going to go into the charts and I'm going to break it down. Now, what I'm going to say about this trade is the lesson in this trade is knowing when to get out and being able to identify when to get out of something. All right. So we're going to go into the charts and let's get it. All right. So as you can see, we got Mr. Softy right here pulled up. Now this is Microsoft, right? So this is on the 5 minute. This is on the 15-minute time frame. I was trading them on a 15-minute time frame today. This is the 5 minute time frame. Now, as you can see, there's a lot of wicks, right? A lot of wicks, and the wicks aren't small. So what that means is there's a lot of testing going on. All right. So we're gonna go right here because this is the time frame that I was trading off of on this play. So let's look at a couple things first before we talk about my entry and my exit. Yesterday, Microsoft went up like crazy, right? Look, yesterday the whole stock market went dumb. Microsoft closed at 426. All right, so 426 is where Microsoft closed at 426.19. Microsoft opened at 427.15. So it gapped up about $1, right? It gapped up. Oh no, hold on. Microsoft opened actually at, my bad. That was pre-market. This is the first candle of the trading day. So Microsoft opened at 428, which is about $2 from here to here. That's about $2. So we know that a gap fill might happen. And that's exactly what happened. Microsoft dropped right here because it filled the gap. Remember, a stock is always trying to balance itself out. I can't stress that enough. A stock is always trying to balance itself out. Okay? So that's why you don't need to be panicking. So, and you don't need to be rushing your trades because a stock could be balancing itself out. You get in a trade and it's balancing itself out and then you lose money. All right. So Microsoft is here and then it comes down, right? So each candle on the 15 minutes, so the first 15, 30 minutes, 45 minutes. So we almost an hour into the market, right? So it's going down. Now the EMAs, this is the 21 EMA and this is the 9 EMA, right? This is above that. It's on a slight downtrend, not a big downtrend. Remember what we talked about yesterday. The wider the EMAs, the stronger the trend, right? So it wasn't a big downtrend. But in my mind, I was like, okay, we broke. So this candle right here and this candle right here opened below the pre-market lows. So I was like, okay, I think that this stock could be going down to here to 424. And then maybe if we got crazy momentum to 422. So it wasn't a big risk to me because I didn't see this play reversing crazy because we were right by the EMAs. So if I get in this play, right? If I get in this play right here to the downside, I'm not going to lose a lot of money because Microsoft ain't going to like shoot up all the way to here in a short period of time because it has to get through all these EMAs right here, right? And as you can see right here, it went up, but then look what happened. It came right back down. These EMAs pulled it right back down, right? So here we are. So I see this wick. So I see this candle. It closes below, but on the 15-minute, we have all these wicks. So this is a very long wick, very long wick, very long wick, very long wick, wick, wick. So remember, wicks are testing. A wick is kind of like, it's one of those things where it matters, but it doesn't matter, right? You need to make sure that you know what the wicks mean and you know where they're at because you could get faked out. Because look at this, you could think that the stock is going down, but it's really a wick, right? So this candle was a confirmation candle for me because it was below these pre-market lows. So anytime a stock breaks below pre-market lows, it could be going down later, like lower to its support. And if it breaks above the pre-market highs, it could be going higher to its next resistance level. And as you can see, because this stock has not broken above the pre-market highs or even tested it, that's why it's over here, right? It's really consolidating. So now, so I'm right here. So I get in my trade right here because I did a video about a EMA reject, right? So it rejected off of this EMA right here. So I got in right here, went up a little bit. I was down like 50 bucks, nothing crazy. And then it came down here, right? And I exited right here, but check this out. Sometimes when I'm trading, I go between the 15-minute and the 5-minute time frame because I want to see something, right? So check this out. So as you can see, right here, we have all these support levels. So if I make a line, let's say I make a line right, let's say I made a line right here, right? Right there. Let's say I make a line right there. Perfect. So now that you can see this, check this out. Now that you can see this, this is some level of support, right? Some level of support. Because every time the stock came down here, it went back up. So what does that tell me? That tells me that the stock it wants to go down, but it's not going down fully. Like it's not like candlesticks are not forming to go down because it's testing, right? And that's the reason why I exited right here, because there was no more, like the next candle opened here and then it came to this support level and then went up, right? So I exited before this candle opened up because I didn't want to chance it reversing just like it did, right? And then as you can see, opened here, closed here. There's a big wick right here. So it's trying to go up too. So the stock, so Microsoft, Mr. Softy, is trying to go up and it's trying to go down. So that's like having two people pulling a rope. It's a stalemate. And that's why Microsoft has not really moved today. As you can see right here, Microsoft is up 90 cents, which is a 0.2% change, which means that Microsoft ain't really going nowhere today. It's chilling, right? So when you think about that and you understand that, it makes more sense now. So I got out because the support was holding. The support was holding. I got in because it wasn't a big risk to me. I was like, I could get in The worst that happens is I lose 50 to 80 bucks. That's the worst case scenario. But the best case scenario is I get in right here. I already see that this candle closed below this level. So most likely it's going to come here. And then if it does break below, it's going to come to, it could test this EMA right here, which is 422. This is another support level that it would have to hit first and break through, which is 424.41, right? So it didn't. I got out, boom. Now this could have been a negative trade. And that's what I want you to understand. Learning how to get out is really an art as well. This could have been a negative trade. If I would have held on to this play way too long, I could have been up here and then be like, nah, it's gonna go down. And then it would have went up, and then you know, most people would have got out right here when they should have got out right here, or got out right here, or got out right here, or got out right here, right? Then it would have came down to the same place it was just at, and then maybe they would have got out, but it would have been less because their contracts probably would have decayed a little bit, right? So, and the reason why Microsoft right now is just hovering is because these EMAs are close together, and the 9 EMA, which is the orange line, is not above that blue EMA. And that's why you see it coming down right now, and it's testing off of this 9 EMA. Once these two cross over and the orange line, which is the 9 EMA, is above the blue line, which is the 21 EMA, then it will have room to run up, and then it'll be able to test the pre-market highs, or at least the high of day, which is right here. But it's not going to go there until it proves itself, right? Drop some in the comments to let me know if that makes sense. All right. So that is my trade of the day. All right. We hit Mr. Softy, $100, but I want you to understand that play could have been a negative play, but I got out still in the profit. And that's the key. I want you to understand, right? It's not always about, making $1,000, $10,000. Yes, you're going to have those plays in those days, but it's about learning how to execute a trade. That's what I want you to focus on, is knowing and learning how to actually execute a trade. So that way you are great at executing and you actually become a legit trader, and you're not just gambling, right? Because this ain't a gamble. This is, when you know what you're doing, it's not a gamble, and it's not really a risk. All right. So that's the trade of the day today. I really, really, really hope that you got some good stuff from this, and be sure to drop something in the comments for me. Let me know what made sense. And then always remember, get out of your head and get into this world, because your head is a very dangerous place to live. All right. Get out in the world, experience the world. You don't need to be living in here. All right. So always remember, tomorrow we got another trade of the day dropping. We got videos every single day coming. So be sure to like, subscribe, and comment. And I'm going to see y'all in the next video. Peace.